What's up? This is your host, Non-Fungible TC, Non-Fungible Today and Non-Fungible Tomorrow. And before I begin, I want to say that thank you to all of you who have been watching my new series. I decided to launch a new YouTube video series called NFT Reviews for Reviews because I've noticed that in the past, in all my videos, I don't really use a lot of keywords, right? And the really biggest problem with these keywords is that because I'm not like reviewing individual projects, and therefore I do not have new viewers, and therefore I have like less than like 10 or really low views in these live stream. But these live stream is actually where you get the insight from, right? Where you really get like a daily insight of what is happening in the market, and also things that people cannot cover when we talk about the cryptocurrency market and so on. So today, and also it seems like this video is working, right? Because my first video got 104 views in just a day, and then Overborn NFT, I got 13 views, which is amazing. And I did share some of my thoughts on the project in terms of the price and so on. So without further ado, today's episode is about a potential financial crisis. And for those of you who do not know, Credit Suisse and Deutsche are in the verge of a collapse. So there are rumors spreading around on Twitter, and analysts are talking about the potential collapse. So let us look at this today and explore, because this is gonna have a systemic impact to the whole market, right? It is kind of like the financial crisis that we had in 2008, and it is a big thing because if the market collapses, not only cryptocurrency, right? Not only your NFTs, your stocks, your house and whatever, the price will take a huge dump, and we might see another financial crisis and a definite recession. So let us talk about this ongoing crisis, right? So the first thing about this, the combined asset base of the two banks, which is Credit Suisse, Deutsche Bank, is nearly 2 trillion, which is 3x the asset base of the Lehman Brothers at the time of its collapse, okay? So this is gonna be a huge scale if this thing really does fails, okay? So on September 15, 2008, Lehman Brothers, a bank considered too big to fail, filed for insolvency. It was the single largest bankruptcy filing in the history of the US. At the time, the bank had 639 billion in asset and 619 billion in debt, okay? So they were unable to pay the debts. So both Credit Suisse and Deutsche Bank are designated as systematically important financial institutions. They are too big to fail. So some people are saying that if they do fail, they might have a bailout, okay? So remember the times when they labeled Lehman Brothers as too big to fail, right? So the stocks of Deutsche and Credit Suisse have been slowly bleeding out since 2009, and both are down 90% from 2009's all-time high. So you can see that it's down 90% since 2009 all-time high. So the reason, so some people are speculating, hey, why is the stock going so low? When the stock is trading so low, it basically means that investors do not think that they can perform. So here's the interesting part. The credit default swap CDS for Credit Suisse are going absolutely vertical and are now approaching the highs of the great financial crisis of 2008. Higher CDS equals stronger market-wide belief that Credit Suisse is going to fail. Okay? So what is this credit default swap? Okay, from my understanding, and also, first of all, I'm not a financial advisor, so don't take this as financial advice or anything. But from what I read, is that it basically means that if Credit Suisse defaults on the loans or defaults on its debt, the person who buys these credit default swaps is able to kind of win, right? Is able to, like, Credit Suisse is gonna pay a premium to those people if they do default on the loans and also debt. So that's why if this goes back to all-time high like 2008, it basically means that people are buying that Credit Suisse might not be able to pay back its debt and loans, and therefore it's hoping to use this opportunity to make money. Okay, a CDS is a derivative that allows an investor to swap or offset the credit risk with that of another investor. To swap the risk of default, the lender buys a CDS from another investor, which agrees to reimburse them if the borrower defaults. So basically, if Credit Suisse default, basically the people who buy this CDS will be reimbursed. Okay. So what does this question mean in layman's terms? If the banks can't pay off their debt, they become insolvent and have to sell off the asset. If the price of these assets fall below a certain level, the other banks too have to start selling to avoid the fossil margin cost of the position. This massive deleveraging event will create a domino effect due to the mass selling, and economic crisis will spread from one market region to another, known as contagion. So Credit Suisse, Deutsche Bank, a Swiss bank, and also a German bank is gonna affect the whole Euro market. And the whole Euro market is actually very shaky. The Eurozone have a record high inflation of 10% because of an energy crisis. So this is gonna definitely add more salt and or add fuel to the fire. So although there's a good chance that the German government will go all out to save Deutsche Bank because it's the biggest bank in Germany, but the size of the bailout is a matter of concern. As you can see, the Deutsche Bank has, in terms of asset, is like number 8 in rank, right? Credit Suisse number 17. So we're talking about a lot of money being involved and a lot of bailouts and a lot of liquidity needed to bail out these banks if they do fail. So no one knows whether the system will start collapsing, but when it does, it will be extremely brutal as a ticking time bomb. Okay, so this is just an analysis. So I decided to go for another. So this is so I read another analysis I shared on my Twitter. If you're interested in these, feel free to watch it. But it really shows us that there's a pending crisis, an impending crisis that might happen. And in the news today as well, the news headline is basically the UK decided to cut back on the tax cut that they said, which kind of tanked the market last week. But at the same time, this rumor is also a huge news in the market. So this is more of a traditional market. I want to share an NFT news, which I think gone under the radar, it's not under the radar of a lot of people, which is important for people in the space. So the greatest tragedy in Web3 is happening before our eyes, and it is not DeFi related. This is a story of misinformation and mob mentality gone wild. This is a story of ArtStation HQ disaster. So for those of you who do not know, ArtStation is a platform where a lot of artists can share the art. 3D designers can upload the 3D designs there. So recently, they came out with a statement saying, I don't think this is recent, but this is like last year, March 8th, right? So the last 3 hours since announcing our intention to run proof of concept for NFTs on ArtStation have been humbling based on a strong demand for artists wanting a way into the world of NFTs. We sincerely felt an obligation to explore this path, but it seems that a lot of people on the platform, did not like it, did not want ArtStation to incorporate NFTs, and therefore they did not do it, right? So ArtStation is a fantastic place for artists to get their eyes on their art, share and sell their work, and find career opportunities, right? So this is ArtStation, how it looks like. In March 2021, ArtStation announced the plans to introduce an NFT marketplace pilot, okay? So now the post is gone now, okay? So the pilot will grant buyers access to the artwork files, but more excitingly, it will include some limited digital rights. So NFTs as digital right management at least seems like an idea worth exploring at worst. The benefit to artists of having fine-grained control over the rights of the digital art without needing to go through significant fees of a middleman is a pretty big deal. So the interoperability and blah, 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 that type of stuff, okay? So, Zero Dot is saying that there's a huge potential for NFTs if ArtStation could get in. But however, this chance is gone, at least for the foreseeable future. So this tweet basically says why this opportunity is gone, right? So, ArtStation understood that NFTs were the mean empowerment, right? So it gives more power to the creators themselves. They're willing to try something new. They're willing to give artists absolute freedom. But instead, they got verbally battered, right? So it shows that, a lot of artists don't really truly understand what NFTs are and what are the potentials of NFT, because when they heard NFTs, they immediately, ask ArtStation not to do that, or we're gonna, forfeit your platform and so on, right? So according to Zero.eve, maybe we deserve it. The space is riddled with scammers and all kind, and they destroy lives. And also, he or she said that the mentality is already caught on, right? Why fight it when you can fit in? This isn't a dig at the anti-NFT community, but it's human nature. So this is a misinformed mob mentality and community self-sabotage the way for the increased freedom. So the truth is there's nothing else, absolutely nothing not to embrace NFTs. But now, the crowd believes that, they don't like NFTs because of all the negative press that comes with it, right? So anyways, this is interesting. This was just posted today, and it gained traction, which is also like a helpful reminder that we still have a long way to go. And it is also a helpful reminder why I do these daily streams. Right? I do these daily streams hoping to educate the people about what's happening in the market, how it affects the cryptocurrency market, the NFT markets, and also the metaverse. Okay. So anyways, so this week, guys, we have to be aware that in Friday, you have non-farm employment change, unemployment rates in the US, and also these different type of forecasts. If it falls short, if an employment rate remains higher than forecast, we might see a rally. But if it's lower, we might see a dump because the Feds might be more aggressive in the interest rate hike. So this Friday, more volatility, guys. Be prepared for that. But also, watch out for the news about the Credit Suisse and also Deutsche Bank. Okay, this week, if anything is confirmed, if they say that hey, we're gonna be insolvent, if there's some any sign that they're gonna be insolvent, the whole market will tank. Okay, so if you have investment in Europe, if you have a huge investment in Europe, I would not financial advice, but keep an eye on those investments. Okay, just be careful. So on the contrary, one of the interesting thing is that this is Bitcoin monthly returns, so it calculates the Bitcoin monthly returns. So congratulations, guys, we have survived September. So September we have a negative 3.1%. Okay, so September usually is the worst month on average for Bitcoin, right? On average, September is like the worst month with a negative return. But people are saying that October could be a October, right? And the reason for that is based on historical data. On average, Bitcoin makes a 26.39% upward movement during October. So that's why people are bullish as well for October. And this is actually quite high, and also same for November, okay? And also same for April, okay? So yeah, September seems like a very bad September. It was a downward September, but then we'll see if October really gives us a green market, okay? So we look at the crypto market cap right now. Bitcoin is at 19,236. Kind of trading size, Ethereum at 1,300. Total crypto market cap 931 billion. So still we haven't gone back to the 1 trillion global crypto market cap. In terms of stable coins, wow, see this huge downward trend, right? So either this basically means that money have lost them in the market, or basically people are buying cryptocurrency, okay? And interestingly, if you look at Nansen, right, what smart money is doing is that as of this moment or in this one day, the smart money is actually buying Chainlink token. And smart money is buying Matic token, right? Look at these. These are not rookie numbers. These are like 13 million and 10 million in market tokens. So if you look at the Matic token, right, not tend to buy now. Usually when these happen, basically the token has pumped, but it basically means something, right? Smart money is seeing something, right? Look at this huge pump, right? Look at this pump in one day, pump, right? Chainlink, kind of a slight pump now, we're slowly retracing. So I think smart money knows something is up with Link and also Matic. So if you're interested, you can do more of your research. But interestingly, this article just came out introducing Chainlink build, supercharging the app growth through cross-chain incentives. So this is a new thing that just came out as I'm doing the stream. And therefore, people are buying Chainlink in speculation of this interoperability thing at Chainlink. So it is a new incentive program, I believe, right? But this is not new. This is actually on September the 28th, right? So why is it being shared right now? And also once this has been shared, the trading volume for Chainlink basically increased. So a few crypto news. Ethereum killer Solana suffers major outage during the weekend. So Solana went down for quite a few hours because a misconfigured node caused the network to sub-process a transaction. Okay, on Friday. Bored Ape other side builder Improbable is eyeing fresh funding for 3.6 billion valuation, which is quite interesting. So maybe it'll add more bullish momentum for the other side NFT or also Improbable, right? SEC now charges Kim Kardashian for unlawfully promoting this cryptocurrency Ethereum Max. So interestingly, Kim Kardashian did in her promotion material say this is not financial advice, but she's still being charged. Alex McKinsey withdrew 10 million from sales to 54 phishing customer accounts. So this is kind of suspicious, showing you the dark side of the space. LFG News, Vanguard is actually doing so well in the crypto space. I mean, the NFT space right now. They hit a 3 ETH, floor price. So is it possible that they're becoming a new blue chip project? And also, interestingly, during the weekend, OpenSea accidentally delisted the Azuki NFT collection. Okay. Lineage, name register was recently discovered by community. A lot of trading volume, which is a video I also did, and gain traction as well, which is interesting. So it is kind of like a ENS thing, but it is predating the NFT ERC 721 token standard. So other NFT news, like Death Finalist draw, the Undead finalists announced, meet the winners, pretty much something like that. Azurian art preview received terrible feedback, right? So this has something to do with Janklin and also the storytelling NFT collection. they released this, and there's also VC backing for this project, and then people saw the art, they didn't like it, and then people were memeing the art as well. So that's it, guys. Are we going to see it in October? If you think we are going to see it in October, definitely leave in the comments below. And yeah, just be careful, guys. This is definitely a volatile market. There is a lot more factors at play. So this is your host, Non-Fungible TC, signing out.